US oil prices crashing into the negative territory for the first time in history due to weak demand given the ongoing coronavirus pandemic. Now, the price collapse is a consequence of short-term storage problems in the United States. Oil dropping below $1 per barrel means that it is now cheaper than actually buying a bottle of drinking water from a store. The slumping oil prices comes despite an OPEC-backed deal to cut roughly 10% of the global crude supply. While low energy prices bring good tidings for a major consumer such as India, there's hardly any demand for transportation fuels such as petrol and diesel. As India is a crude-intensive economy in normal circumstances, we would tend to gain when crude prices fall, as cost of inputs in various sectors would then go down. This would also help support the value of the rupee, but the government may lose revenue if it lowers prices. Consumers will benefit only if these prices are reduced. Indian refiners have already cut production as the lockdown has led to a sharp decline in demand for transportation fuels.
And based on the record low price of oil that you've been seeing, it's at a level that's very interesting to a lot of people. We're filling up our national petroleum reserves, the strategic reserves, and we're looking to put as much as 75 million barrels into the reserves themselves. That would top it out. That would be first time in a long time it's been topped out. We'd get it for the right price.
Rajeev Dubey of Business Today is joining us on this broadcast. Rajeev, good morning. Unprecedented times that we're really witnessing for the economy, as well, a result of which we're seeing the US crude oil prices down to this unprecedented and historic low. What really does it mean for India? If you could break it down as to what it will mean for the consumers out there.
Yeah, Akshita, for India, unfortunately, we are not going to be able to exploit this situation very well because we do not have the containers to be able to, utilize this fall in prices and to be able to, top up our reserves to the extent where we can, keep these reserves for at least 45 days that our target is. Our containerization is still not ready, and so we may be able to buy some of the crude in the international market, but definitely not at these prices because crude is essentially going to be bought. What we buy is essentially Brent crude, which is still at about $25. This is largely a very odd situation, which is called a super contago, which is basically a situation where the spot prices are going at a super discount in the American market. These are only, let me just specify clearly that this is a Western Texas Intermediate crude. This is a US crude market specifically of Western Texas, and that accounts for a very small percentage of global trade. Much of the trade happens in Brent crude. More than 2/3 of global trade happens in Brent crude, and those prices are still at about $26 to $27 per barrel. So we are not going to be able to exploit this situation, but this is also a very odd situation where the storages in the US market are full up, and minus 37 is basically the price of futures trading for the May contract. So May contract was about to expire on Tuesday, and because the storages were all topped up, it's basically fallen to this level where essentially those who are holding, those who are the producers are actually paying those who want to buy to store this crude, because there is more than enough capacity pull up, and they don't have enough storages available to be able to keep this crude. So minus 37 essentially represents a price where producers are actually paying the buyers instead of getting money from the buyers. But unfortunately, this is not a situation that we will be able to exploit very well because we do not have the storages that are required to be able to top up this, to be able to top up those storages at these prices. These prices are not for us; these are for American markets.
Okay, Rajeev, thank you for joining us with all those details. As far as you, the consumer, is concerned, if you're expecting that maybe this will affect you and that will bring down the petrol and diesel prices, that depends on whether the government decides to pass on the benefit. And if they do, the government could perhaps lose some revenue. So at this point, we'll have to wait and watch to see how the government chooses to view this situation.